My guest today is Jude Goodrich. Jude is the head of capital markets at Mainshares, a company that's quietly building one of the most important bridges in the world of small business acquisitions. They connect the next generation of owner-operators with the capital they need to buy real cash-flowing businesses. If you've ever thought, I could run a great business, but I just need the money, Jude is the guy you want to know. He sits at the intersection of ambition and capital, seeing hundreds of deals and partnering with acquisition entrepreneurs who are reshaping local economies, one business at a time. Thanks a lot for coming to the podcast, Jude.
Yeah, I appreciate you having me. I'm excited.
Please first give us your background and let's go from there.
Yeah, absolutely. So I'm from Minnesota, and before this, I worked at a company called Carta, and the Carta is like an equity management platform for mostly like venture-backed businesses. I worked on pretty much every different arm of that. The last team that I was working on, we were helping build out SPV formations, fund formation offerings. There's a lot of actually like similar overlap of what we're trying to build from like a product perspective within these SMB acquisitions, which is kind of helped me as we got kicked off here at Mainshares, and I was one of the first non-engineer hires as we were building out the infrastructure to support these transactions and build it out. So been here since the very beginning, and we're growing out the team quite a bit now.
So the company was founded by William Try. What inspired the creation of Mainshares, and what core problems does it aim to solve in the SMB acquisition space?
Yeah, absolutely. So Will actually founded a sell-side business brokerage called Beacon probably 5 years ago. The idea was bring a more tech-enabled business broker and process for business owners to sell and transact. So we started on the sell side. They probably transacted like 50 or 60 businesses over the last like 5 years. It's still operational. What I think he realized was, meeting hundreds and hundreds of business owners, there was a large percentage that really cared about the legacy and who the actual individual taking over the business was. But the way that a lot of brokers work, who actually are like the gatekeepers and the individuals in the final conversation, is always the people that are the most capitalized. But that doesn't always align to the people that the owner is looking to transact with and sell with. So I think what he realized was we could find really quality operators that aligned well with sellers, but if they didn't have the financial backing, it was very hard to actually move them through the transaction. So if we eliminated the barrier of capital, we can actually bring forward better operators that these sellers ultimately want to work with through this transitionary period. And then the outcome, in our opinion, can be a lot stronger.
And in the beginning, you were just focusing on looking for those operators, or it was more like a chicken and egg situation, or how was it all started in the beginning?
Yeah, so I joined before we launched the website, and I was responsible for trying to solve the chicken and egg. What we did is we went to like kind of key stakeholders around these transactions where we can get some leverage. Think like loan brokers, attorneys, investors, people that had access to quality operators and people looking to buy businesses. The reality I probably spoke to, I think I saw my Fathom recordings, the first year is maybe like 800 conversations with operators, investors, and then these kind of key stakeholders. So yes, it was absolutely the chicken and egg situation. I think what we were looking for in the beginning is let's partner with a really quality operator in a really quality deal, and we'll be able to go find the capital to back it. And then I would say the second half of last year is really when we started to get to the scale and the point when on a higher level, we were able to connect investors and connect deals where we were able to, I think it was about like $17 million of equity syndicated across 15 transactions. In the beginning, it was, hey, Judd, you have $3 million to buy this car wash in Kentucky. It was a very hard question to answer, and you kind of had to see the market clear, but now it's starting to get to a spot where we have good scope on what works and what doesn't.
Hi, friends. Today's episode is brought to you by ScalePath, peer groups for HoldCo and small business owners. If you own a business, you're probably making mistakes that cost you time and money. Well, ScalePath has built a community of other business owners who have already made those mistakes and will share their experiences to help you avoid them. Each group is small, just 7 operators with similar business models and revenue. You meet once a month on Zoom to get direct feedback on your biggest challenges and often hear about opportunities in other industries that might apply to your own. There are groups for home services, B2B, manufacturing, professional services, HoldCo owners, and many more. Plus a community forum, expert calls, a members-only podcast, and some big discounts on various industry events. Apply to join ScalePath at scalepath.com and schedule a call with the founder, Rand Larson. Again, join scalepath.com and schedule a call with the founder, Rand Larson. Now, back to the show. And how was it in the beginning when you found, let's say, 5 or 10 great operators? Did you sign a contract with them, or how was it working? Because you didn't have the deals yet, I guess, and the capital. So how was it all?
So what we started to do is we would do a ton of deal reviews. So we would look at the deals and almost act as a buy-side advisor to them. And so we would evaluate the deals. We would help them come up with diligence questions to determine if it's worthwhile. We would support on the modeling side to help them create offers. We would do literally whatever it took to help them win these businesses. That was obviously not a terribly scalable approach. And we had to pick a handful of people to do this with, but we were able to help a couple buy businesses, which then obviously helped us scale the capital side as well, because investors aren't intrigued unless there's good quality deals and operators. So we had to kind of jumpstart that.
You said having 800 conversations, meetings on the first year with operators and investors. How was the feedback?
So the feedback was, this is from my, it's interesting because my time at Carta, I probably met 1,500 founders. And I was never terribly blown away by a lot of these ideas. And there are some incredible ones, but I would say across the board, a lot of people were saying hey, this is something in the market that's necessary and needed. So that was a really cool sign from that standpoint. I think a lot of people, and there has been some people that have tried to do this. It's a really hard solve because it's almost like a 3-sided marketplace, right? We are at the intersection of the seller, the investor, and the buyer. And that's definitely, marketplaces and 2-sided marketplaces are challenging enough. And then you add in a third level, it's quite complex. But I would say that was a very cool thing to hear. And it definitely, as I'm pounding the ground trying to get a couple of the first deals done, at least there were people saying and helpful along the ride. It took us a little bit longer to get to where we are than I maybe expected. But it's cool to see that. So. We're very thankful of working with some awesome people.
So how long it took to close the first deal, and did you have any operators who quit, who were okay, I can't wait any longer, or how was this?
The first deal took about a year, because if you think about the cycle of, and it wasn't just from our standpoint, we would help them evaluate a deal and we'd see a red flag, and our recommendation would be to move on. And we were also, we had to generally start working with people that were earlier in their search cycle. So the average is probably 12 to 24 months. So then, people that I've actually, just one of the individuals I met almost 2 years ago is just closing now, right? So we've had a lot of conversations. I think we've looked at 6 deals in total. So there's a little bit of a lead time from that standpoint. So yes, a good amount of time to get things spun out.
What about the business side for Mainshares? How do you guys make a revenue, or how does it all work? Maybe a structure of the first deal, or how does it work for you?
Yeah, so from there's a couple of different revenue streams, but the majority of the revenue is coming in on the equity financing side today. So what that looks like is we have 2 approaches to raise capital. We have effectively kind of a DIY raise where people are creating SPVs and we're providing the tooling in order to complete a 506c private placement. This would be relatively similar as an AngelList or a Carta to spin up these vehicles. The additional advantage that we provide is we've pooled in a couple thousand investors that want to participate in this, but we're also enabling the entity formations. We're doing the investor accreditations, KYC, AML, blue sky filings, Form D is we provide the form investment docs, and they're effectively using the software to facilitate their raise. And that's a platform fee. Alternatively, we have a broker dealer that sits on top of the platform. They're effectively like the service and execution team that can actually work on behalf of the sponsor throughout the fundraising process, right? So they are helping from a diligence, like an investor level diligence perspective. They are creating SIMs. They are working on structuring deals, and they do very kind of unique structuring to align incentives and increase the likelihood of being able to, capitalize the deal with really great investors. And they're on a success fee basis. So they're not going to get paid unless the deal is successful, and they obviously are licensed to be able to act on behalf of the operator to raise the capital. And those are like the two main layers today. Kind of going forward, we're going to help people find businesses and run the entire kind of transaction side using the same deal team that we use to transact for sellers. So we already have a lot of that infrastructure built out today, and the resources to do so.
So far, you've done 15 deals. Am I right?
15 capital raises, okay. And then about, I think, 60 businesses we've transacted. So we're about 75 total deals.
You're at the center of so many deals. What's something about this world that most outsiders totally miss?
Yeah, I mean, I think the big thing right now, and this is where we're a little bit like contrarian, is a lot of people are thinking about it from like the perspective of, SMBs, buying a business is just like a very fast, easy way to make millions of dollars. And that's kind of like the perspective that they're starting with like the end in mind. But when I talk to like most successful operators, they are like obsessed with the journey, right? They're going in and they also realize that it's not like a step function. It is every day they're making minor improvements. And then over the course of a handful of years, they get to this unbelievable outcome. But the ones that are focused on, hey, I'm going to get to the outcome and it's going to be fast. And it's going to be, it's going to be, give me the financial freedom that I'm looking for, get me out of this corporate job, whatever it is. I actually don't see them being terribly successful. And a lot of times they actually don't even get into the game, right? They're more the perpetual searcher because they're looking for that perfect opportunity that is a plug and play to that outcome. There's obviously outliers, and obviously, you've had some incredible guests on the show that have been able to do that, but a lot of them have still spent 5, 10, 15 years perfecting the craft. So I think like that's probably the biggest thing that I see is, they instantly think that they're going to be building out a $100 million HoldCo, and it's not going to be too challenging to do so. And they never actually buy that first business. It's a more common route.
Could you give me like a success story where a great operator and then you found a great business for this person and you had the capital, you put it all together. How did it look for the operator? Like if we can, you don't need to share the names of the business, but just let's say we have like 100% of the business, you bought 100%. How much did the operator got and how much they had to invest themselves? And maybe also like what type of business you're most excited about. Hey, quick break from the episode to tell you about our next sponsor, Spacebar Studios. If you're running a portfolio company or working inside a private equity-backed business, you know how hard it is to build pipeline, shorten sales cycles, and improve win rates, all without bloating your team. That's where Spacebar Studios comes in. They act as a flexible growth team for B2B companies doing between 1 million and 50 million in revenue. They're handling everything from messaging and outbound to paid media. And the result? High ROI campaigns that actually move the needle. They've helped SaaS, compliance, and enterprise services businesses, both VC and PE backed, build serious demand and accelerate revenue. So if you're ready to scale without hiring a small army, head over to spacebarstudios.co and check them out. That's spacebarstudios.co and check them out. Now, back to the show.
Yeah, so for the first one, I'd say one of the most successful deals that we've had was a floor installation company. And call it about a $5 million business. There was some real estate attached to that as well, but that obviously so from a business perspective, about $5 million. In this situation, the operator put in $75K and then raised about $1.3 million from, call it about a dozen investors or so. And it was pretty interesting because I think the perspective originally was, this is a really good deal. The operator was of very high quality, that like the capital raise would be easy. And like in his situation, he probably could have raised through friends, family, and this and that, and it throughout his network. I think where we were coming in is like, hey, like if you really want to be able to like maximize the value of the capital that you're bringing in, let's look to see if we can expand this to people that could actually provide value to you in tandem with the equity that they're providing, right? So in this circumstance, he had a lot of the money like soft circled from very passive capital that wouldn't really be involved in any capacity. And then when we brought this to Mainshares and after we like packaged it, we moved through and raised the entire 1.3 million within about 7 days. So from scheduling to equity commitment letters signed, a 7-day process, and then all of the capital actually came from investors that we sourced. And I think that's one of the things that I'm like really focused on is like, as we're scaling out like the capital, it's not like going to doctors and lawyers and your traditional high net worth individuals that are investing into alts. It's how can we attract investors that can actually provide a positive impact to these businesses. So that's going to be a lot of really successful business owners. It's probably like our most active investor base. There's also like a good amount of like investing professionals that have been instrumental on the structuring side as they're going through, helping evaluate different term sheets on debt, making connections to other lenders that they think would be, stronger in this situation, or even helping like renegotiate LOIs so there's like some downside protection. And so that's more of like the perspective that we're looking at it from, and that was an awesome outcome. It's definitely not always the case, and it really does come down to like the operator a lot of times. So when people ask me about time, it really depends on who the jockey is.
What is the common reason those operators coming to you? I guess it's not just capital.
Yeah, so I would say like the initial is capital. I think the reality is it comes down to like more of like experience and support and increasing the likelihood of not only transacting, but transacting the right businesses, right? Since we have seen so many, I think we can provide really interesting guidance because, there's a lot of this is just lessons learned from what worked and what didn't work over, dozens and dozens of deals. So I think people generally look at us from that perspective, where they want to sound board on these various industries. And, we definitely have experience kind of across the board because we've always supported more of an agnostic and less like industry specific approach here. So I'd say that's a large one. And then I think, as people, and I can share this a little bit more, but like right now we're focused on the acquisition financing, right? That's kind of like the core of how can we enable these transactions with the right operators and also allow participation from, the right investors as well. But then on a go forward basis, there's like really interesting things we can do once we, are working with, hundreds of companies that have transacted through us, right? There's a lot of different like capital needs, if that's a line of credit or if that's a equipment loan. Already just recently, one of the groups reached back out from a year ago when they transacted and they're looking to scale and they're looking for growth equity partners, right? We already have the relationship. We have some of their financial information of how performance is going. We have a broker dealer that can, start to structure this deal out and reach out to these type of partners. And that all of a sudden becomes super interesting where we can actually provide a lot of value on an ongoing basis. And obviously like capital is the core of what we do. There's obviously other things that we'll support in. So I think kind of that long-term vision of buying the right business, and then also enabling great partnerships throughout the hold period is why most people are going to work with us.
Now, as you have this great list of exceptional operators, do funds and maybe other companies are coming to you asking just the operator that we have the capital, we have everything, we would just like to get access to those operators, or has there been any interaction like this?
There has. I mean, in some circumstances, it absolutely can work. But like, I would say this is where we're a little bit different. Like, we have all of the elements just to be a very large, successful private equity shop, right? We have the entire deal flow sourcing team. We have hundreds of individuals that want to operate businesses. We could set them up on, small carry positions and take a majority of the economics. And we obviously have, access to a lot of capital via our investors of Mainshares. And it's just not really the mission or what we're looking to accomplish, right? So like, if the majority of the operators are walking away with a majority position in these businesses, and investors are sitting in a more of a minority position. So when these groups come to us and they're just looking for, an operating partner to handle from a transition standpoint, and they're a private equity group, it's not very interesting for us.
So when it comes to the mission and vision, why not become a traditional private equity firm in the long term, or what's the plan?
It's quite the opposite. I mean, the goal is to keep businesses like locally owned and individually owned if possible, right? So we have like a firm believing that like the small businesses are the fabric of a lot of these these local communities, and like we've seen that time and time again. We've seen the impacts, and like there's a lot of staggering numbers around this where owners that don't live in the communities, it's almost like 66% of the revenue generated leaves that market, right? If you start extracting that out, thousands and thousands of companies, it makes it relatively challenging for like these smaller communities to really survive. And like that is definitely the goal of what we are fighting against. So it's, can we enable individuals to continue to own? I mean, if you look at like, this obviously happened on like the farming side. People don't really care too much that there's not a lot of independent farmers. But then when you saw like institutional capital buying single family homes, and over the last, call it 10 years, you see certain markets where like Jacksonville is almost 20% of single family homes are owned by institutional capital. Atlanta is 26%. Obviously, Phoenix has had massive appreciation, and that's basically pricing people out of ownership, which is one of the key ways that previous generations has accumulated wealth in order to retire, right? So like you could see a very similar play happening on this side, and the effects will be rippling, right? Like right now, the amount of dry powder that's sitting in the buyout private equity market is, well over $1 trillion. I think it's like $1.4 trillion. There's not as much exit activity happening on the top end of the market that's pushing everyone down, right? So like the reality is then there will be less individual owners unless you are able to bring significantly more capital into this market. So no, I don't see us ever becoming a private equity group.
But let's change the question. What about permanent HoldCo vehicle?
Yeah, I mean, I think that's like, as far as like our thoughts on it,
Mm-hmm.
I think there's a strong story for that, right? So it's like, and it a lot of times, like people talk about the 7 million businesses that will transact. Like most of those are not transactable to an individual buyer, is the reality, right? So like, does that mean that, I met someone when I was in Minnesota recently, he's running a relatively small like HVAC company. He's got probably like 3 techs, really strong brand names, been doing it for almost 40 years, right? Like that's a very hard buy for an individual, but someone that is has a platform, can tuck that in, can provide those services, can continue to, retain those customers. There's a strong narrative there where that individual can actually have a semi-meaningful exit and enable, retirement and and everything from that perspective. So yeah, I think like generally we are probably more inclined on like the buy and hold strategy, less on, hey, we're going to scale super quickly and we're going to sell in 5 years. Obviously, like we can't impact exactly what everyone does, but from a mission standpoint, a little bit less interesting.
Can you walk me through the investor experience on the platform from deal discovery to investment execution, meeting the operator they're going to invest in? How does it all work?
We are basically curating the opportunities. Right now, I would say it's about a 10% acceptance rate of deals that we will evaluate that will ultimately bring onto Mainshares. I think like the quality is so critical. It always will be critical, but especially at the beginning, where most of the investors we have are quite savvy within S&B investments, and they have portfolios and they know what really good deals look like. So we're curating the opportunities, and then we're using some different like ruling logic in order to invite them to specific deals based off of their background, check size, what they're interested in, their value adds, right? So there's a good amount of deals that are getting circulated on a kind of invite-only basis. But from a majority of the experiences, they're able to see, a large percentage of the deals. The way that we have like the platform set up is first is, teaser information. Then they're, requesting access to opportunities. This is going to the operator where they actually have the operator's control and, who's viewing this deal, right? I want to make sure that this individual is aligned. That will then, when provided access, opens up everything that's necessary in order to actually evaluate the deal. So this happens quite frequently. It's an easy misstep that I see people take is like, they'll have missing information that I would need in order to decide if it's a good deal. And that's how we've structured a lot of the investment opportunities all the way down to, and this is something we're trying to push a little bit more, is like standardizing investment docs and bringing those out to investors as quick as possible, right? So you're going to have, your investment docs, your deck, your data room, and if you're interested in committing the entire flow all the way to the commitment process. So we've built in the investor accreditation or KYC if they're going through our broker dealer. Super clean, easy process to do that, making sure that these are compliant 506Cs, making sure investors are actually accredited, all the way down to the execution of subscription agreements. And then from there, we are actually helping and we're probably going to build out more closing functionality. But right now we realize that, attorneys are likely going to be handling the purchase agreement close. The banker is obviously helping facilitate the SBA or the debt close. Operators are generally doing the LP closings process, which candidly, a lot of people don't exactly know. They get subscription agreements, they countersign them. They don't know that the 15-day window to file their Form D is kicked off. They're losing their exemption status. They're asking for investors for specific info. So we actually kind of help in that process to like make sure that we have all the accreditations, we have all the documents signed, we have wire instructions, we have escrow set up to try to smooth the closings process, especially as there's changes with like the SBA and like the requirements more for seasoning of funds, being able to show that and request that information in a kind of systematic way. So we'll handle all the way to close, and then investors are then onboarded to our platform in order to receive, financials, K1s, investor updates, and distributions, which, I'm sure we'll chat about more, but is kind of like the core driver that we believe is like vitally important in order to introduce more capital into the market.
Myself, my account, I have lots of people reaching out, lots of investors like send me deals and then they would like to acquire the company and hire an operator. You have solved all this. So my question is, how much work does it require from your side today to attract those new investors?
It's always a good amount of work. I would say like right now, a lot of investors are coming in via referrals. Right. So like we're obviously doing different like kind of growth marketing things. But I'd say the best investors are coming through investors that have already participated in some deals on Mainshares. We're seeing, new parties. Like I just talked to someone recently that's out in San Francisco, longtime tech, angel investor for years, is looking at the asset and looking at their investments as they're getting zeroed out is, hey, there's, it's like new to them, right? They've never really heard about this, but they're, super intrigued by the cash flow nature of these businesses, because obviously most venture and angel startups are not generating cash. So we're seeing, more players kind of come to us through word of mouth. And I think that's as a result of, all the good work we're doing.
So let's say I'm an investor on your platform. What does it mean for me to be on this list? How many deals do I see per week, per day? How does it all work? Have I, when wedding me, do you ask from me, which type of opportunities do I look for? Obviously, what type of ticket size, things like this. How do you make sure that my email is not bombarded with different opportunities from Mainshares?
Yeah. So we do have that logic. I think the majority of people are, even funds, when you look at a lot of the funds in this kind of SMB lower middle market, the thesis is quite wide, right? It's B2B services, home services, niche manufacturing, value add distribution, maybe a couple of healthcare deals, right? Which is basically the assortment of a lot of these cash flow plays. So I think, a handful will probably have these owner operators that are also allocating. A lot of times they're hey, I want to invest into an HVAC business because I've been operating one for the last 20 years. And I can tell, this new operator a couple of things that they could learn. So that's where they'll have more of a refined buy box, if you will. From a quantity perspective, it really depends on the amount of deals that we're working on. So most of the deals are coming to us. And I would say last month, there was about 55 deals that we looked at that were under contract. I believe 8 of those we ended up partnering on. So I would say right now, and this is my responsibility internally, is all of the new deals. We have a couple different paths to originate these transactions that kind of rolls up to me. Our goal this year is 75 closed transactions, right? So we're looking at about 8 to 10 or so a month if we start now, because some of them will take 4 or 5 months to actually close. So I think it's generally 6 to 10 new deals on a monthly basis.
That's a lot of deals. And when there is a scenario, there's an excellent operator, great deal, great company you'd like to acquire. How often is it oversubscribed, or is it always the case?
It's not all. I wouldn't say it's always oversubscribed. I think it's we've definitely partnered on some larger deals that I think it takes a different capital strategy that I need to work through, right? It's call it $4 to $6 million of equity is quite challenging. It's too small for anyone that has committed capital. It's a lot of interested 100 to 200K checks. But I would say on the sub $2 million, we're seeing quality deals getting oversubscribed, which is fantastic to see, to be honest. And it's really coming down to what those investors can bring to the table, right? So that's why we're promoting and trying to find people that are interested in doing some value add investing. One of the guys we work with quite frequently is really good on the web creation side. So when he cuts a check, he's redoing their entire web presence. It takes him about a week, right? But he's I can get this thing spinning. I can help you kind of change your process of scheduling, bring that back into your CRM, connect some things in the back end, can help with accounts payables, receivables. And it's wildly helpful, right? You otherwise have to pay someone likely to do that. So those are cool things that we're able to see, and that's where that capital is going to get accepted versus someone that it's going to be completely passive in nature.
If you can share, what have been some of the smallest deals? What have been some of the largest deals? And do you see as time goes by, there is a limit? At the moment, you would like to do 75 deals per year. Okay, you accomplished that. Do you want to double that next year? You have to increase the team, or you prefer to switch to larger deals? So you maybe do less, but better, or?
I think it's less and less interesting to go farther up market. Because it's less of the mission we're looking to solve for, right? It is the hard, the sub 3 million, sub 5 million EBITDA market. There's a reason why most capital providers are less interested in it because it's just the same amount of work for a 1 million EBITDA business as it is for a 10, right? In a lot of senses, it really is. So like naturally, most folks want to go up market because there's, higher upside, less amount of work that they actually need to put in. From our standpoint, I think there's a tremendous amount of volume that can happen in this, sub $3 million market. And if we can create really strong systems in order to handle that volume, that becomes really interesting. We're also thinking about it like there's different ways that we can leverage like ongoing support through, building out like an advisor network, right? So like I think about it from the perspective of if we can stack the cap table with like very quality investors, we can provide a level of like business owner community, right? We have like kind of hundreds of business owners that are inside the community currently operating. We're really scaling out different advisors. Now we have people that they can tap into on an ongoing basis. Now we don't have to be the only ones to help support all of these companies that are working with us, but we can still increase the likelihood of good outcomes. So I think about it kind of from that side, but I don't envision us going, up market in a couple of years just because we cracked the smaller side. It's where we'll live.
You mentioned the one savvy investor who knows about web services. What else you usually do post-acquisition? Maybe some of the things you can share. I know you have this new plan, new strategy of what exactly are you trying to do, but maybe there's something you can share.
About other people that are providing value or?
Yeah, like post-acquisition with this operator, obviously they're very good. They know the industry. They've been there, done that, but still they need some type of support. If you can share, what are you helping them with?
Yeah, so I think I think it'll probably be mostly focused on like capital advisory. So it's like even down to like, it's something I see missed quite a bit. People will have like a fractional CFO, an accountant, or maybe like a full-time CFO that's not really doing a lot of their like capital efficiency, right? Like I have an extra $250,000. What should I do with it? Do I pay back my investors and the preferred return? Because, as soon as I pay, investors back, I start taking, large percentage of distributions. I also have a SBA note over my head, and that has a personal guarantee on my house, right? Should I actually use that to pay down the debt and give myself a little more breathing room? Because, we have a couple months coming up that are generally a little bit lower on a year-by-year basis. Or how should we actually go about reinvesting that capital in order to like drive the total value of our business up? So like, I think there's a lot of really interesting things that we can do from that standpoint on an ongoing basis, and will likely be where we'll really like lean into as well. Same with like, hey, someone reached out to me recently is they're looking to grow and expand. They have a $500,000 line of credit. They're looking to expand it to $1 million. Can we help them work with the bank to expand their line of credit? And then, pair that with they need to buy a handful of trucks. Let's connect them with different equipment lenders in order to, efficiently scale by, resourcing different financial resources.
When it comes to those operators, how many of them percentage-wise are like first time they would like to acquire a company? How many of them maybe have sold the business but now would like to maybe do it a little like do things like hassle-free, and they would like to have like a partnership with you because like doing it solo, it's just boring and miserable?
I mean, the majority of these businesses in the landscape that we're in are bought by first-time operators, right? And the reality is a lot of them are coming from backgrounds that are not the industry that they're buying in, right? It is like a high percentage. We're obviously trying to gear towards and like, how can we take like a true industry professional? Like one of the guys we're working with he might not have even gotten his like GED, started working at like a HVAC business 25 years ago. He's a GM of $25 million revenue HVAC business working for an absentee investor. No ownership, decent salary. And how can we bring those people over to being true owners is what I find the most interesting. So, there's definitely, that is what we're inclined to, but I would say, yeah, a good percentage are going to be, I'm doing this for the first time. The reality is a lot of people are pretty overconfident in this market. So they have to kind of get their teeth kicked in a few times and realize, hey, I do need extra support. So that is what I'm generally looking for, because it's the most common path. And then you do see a lot, like there's a handful of groups I've been working with that they've been in the space and they've been buying businesses and operating businesses that are running holdcos for 10, 20 years. And they have tapped their investor network. They're going to look to expand over the next 5 years. They're looking for new capital partners, and like a more efficient process to raise money. So we do see that a decent amount as well. I think a lot of people say there's capital everywhere. It's all depends on if you have the right connections. So we do see pretty experienced groups that have very solid track records that are still coming to us, which is cool.
Do you prefer a guy with an MBA right from the school, or you prefer like a 40-plus-year-old who has tons of experience working in an industry, but now would like to make this jump and has some savings to invest himself as well?
Candidly, the latter. I think that there's this might be like a hot take, but I think there's like a level of like entitlement with a lot of people that are going to an MBA, because it's literally designed, you go to this and you make more money as a result of it. Like you are entitled to making more money, and you go and you talk to your boss, and like you get a 20% increase, and it's like built into like a lot of corporate businesses for decades, right? So I think there's a level of that. I think you're not owned anything in this world, and especially with these small businesses, like they are finicky at times. I have a lot of friends that started them, have scaled up really large businesses, and they are still, in the trenches on a daily basis when something goes wrong. So I think they have to deal with the problems just like they did 10 years ago. So I think like the latter is a little bit more intriguing. It's kind of similar to like, if you think about like, and you kind of know the story of like McDonald's. When McDonald's looked to expand, they went to wealthy people to buy these businesses. The quality was terrible, right? And they had no quality control. And then what they did is they started going to, I would say like, veteran-backed people that really cared about the process, the people, and then the quality control issues across the board as they expanded were completely fine, right? So it's like, if you find the right people that have the right mentality with this, I think it's easier to work with. They are going to, working with the seller, right? It's less of a negotiation. It's more of like, we're on the same side of the table. I've seen that happen quite a bit, and they're quite excited to continue to work together. And even in a lot of circumstances, when the seller says, hey, we're going to stick around, when they're talking to like that, MBA or kind of corporate background, like they're definitely not going to work together, versus the person that's also been doing this for a really long time. We've actually seen really cool partnerships post-transaction on a higher clip than the MBA background.
So when it comes to the situation post-acquisition, a year goes by, but something goes wrong. What does Mainshares do, or what do you do like when something really like bad happens with the company? You help to put together the operator, the deal, the capital. You're responsible for it all. So how do you act?
We're not acting in like a responsibility standpoint, right? That would also like dictate like a level of control. So, if this is like, if we were more of like a search fund, right, we would have the ability to pull the operator, to course correct. Like we actually don't have the power to do that in any capacity, right? These are, there's ways around that you can help. So for example, we've been helping form advisory boards. So we have, in some circumstances, there'll be like an investor that's going to be taking a board, and then an independent, right? A 3-person board. Relatively like simple, but I think that helps this single player mode of, operator going rogue. it isn't always easy to like set this up on every single deal, but it's something that we've been like helping promote quite a bit in order to help like course correct as needed. But that's like the difference between, the approach that we're taking versus like a search fund or a private equity group where they can, effectively make moves and that they are in a controlling position, which generally is going to be from like an ownership standpoint as well.
So coming back to this story you shared that the guy was working in a HVAC company which was doing like 25 million in revenue, very experienced guy, and now he would like to own a business. He comes to you, he has the savings, he has the experience, he can do that. So what is the structure of a deal? Like how much this guy end up owning of this company you're putting together, the deal you're putting together?
Yeah,
typically, or it's always different?
Well, so on the, a self-funded search kind of approach where like an individual's coming in to act as an owner operator, call it like SBA size deals. It really has to do with like the leverage and how much equity you're bringing to the table will dictate a lot on like the ownership side of things, which is definitely like the landscape that we're living in for the most part. So like, I'd say over the last 100 deals, I actually just looked at it before we jumped on, 80% is coming on average of, deals closed and deals under contract is coming from like senior debt. Then we're seeing about like maybe 5 to 10% seller finance. Occasionally that's a little bit, lower, and, total debt in is around 80-85%, and then, 10 to 15% equity. It really depends on the purchase price of the business, to be honest, where I'd say the biggest thing that people screw up is they over leverage and they don't have enough capital to operate, and working capital is underinflated. It's a very common tactic from a seller's perspective. So in that circumstance, the way that it usually works is investors are going to get preferred participating equity with a step up, right? So the preferred equity a lot of times is just going to sit above the interest rate of your senior note, right? This is just to align incentives to pay back invested capital. Otherwise, you're incentivized to pay back, debt before investors. And since they are taking a lot of like the material risk and economic risk, we try to align the incentives so investors are getting paid back on a yearly basis with their preferred return, their return of capital. And then the step up is basically amplifying their position to account for the leverage on the deal, right? If you put 90% leverage on a business and investors come in and they put the 10% down, owning 10% of this business that's highly levered, it just doesn't pencil from like risk to return perspective. So a lot of times what we see is there's like a 2x step up on the invested capital. So instead that 100,000 would convert into 200,000, call it over $1 million. Now they own 20%. Operators can be walking away with 80%. So that's kind of how the market is like pricing this out. It is very operator friendly. There's no doubt, because as soon as you go up market and you're doing like a 50-50 equity to debt deal, the operator or independent sponsor is going to be obviously in a carry position, right? There's going to be MOIC hurdles, but they'll probably never really go above, call it 40% carry, versus in these circumstances, it is closer to like 70% carry towards the operator. So it's definitely friendly, and that's not something that we set. That's just how these deals have been done for quite a while. So the outcome is like 60 to 90%, 60 to 80%, I'd say, owned by that SMB owner after they've repaid capital.
So you're in this great position of seeing lots of deals, how they go, post acquisitions, the good, the bad, the ugly, all the expectations versus reality from those operators and the discussions you have with them before they doing this. What maybe advice would you give to someone considering their like SMB acquisition, like everything you've seen, some things that come to mind? It's a very broad question, but maybe there is something.
You don't want to like tackle this alone. I think it's like a very like a lot of people in this space, they would rather kind of try to figure it out themselves. And there's so many things you got to figure out yourselves, and you have to like put in the work. But in the end of the day, like you drafting up like all of your LOIs using ChatGPT and then not realizing that in you're going to spend and you're going to start incurring costs from like legal diligence. And then you set this up where it's going to have to get restructured. And now you're 20K in the hole. And lo and behold, your offer is so far off from what they're going to be able to renegotiate at. Those deals fall apart, right? Then they get quite frustrated because they're like, I spent the last year, finally found this business, and like we lost it, right? And we're out tens of thousands of dollars. And a lot of it kind of comes down to is like, find a support system, find people that really know what they're doing in this market. There's a lot of players that are, I would say, like kind of small shops that are kicking out doing advisory. There's some that candidly just couldn't hack it on buying a business. They're not really the greatest people to turn to. So like find the right partners in this and be willing to pay for those. I'd say like that's a second mistake on a lot of this is like people thought about this. They haven't really prepared for the capital needs to actually acquire. Take some time, right? I think there's also interesting things that people can do is like that people never do, right? Like I know a lot of people that want to buy HVAC businesses, and I'll ask them, how many HVAC owners have you spoken to aside from the seller? There's 144,000 HVAC businesses in the US. Go talk to some of these people. Figure out if you actually want to buy this business. What does the day-to-day look like? Is that something you're interested in? Who are their customers? You want to interface with those customers. I was talking to a friend recently about like a commercial cleaning company for restaurants. And he's like, I wouldn't want to work with restaurant owners. And he started listing out all these reasons. And I'm like, very intriguing, right? Like people don't think about it from that perspective. They're like, oh, good deal, good financials, seeing it from a model perspective. And then they realize I would never want to actually do that work. And push comes to shove, you'll be tested to do that work. So that's kind of like the last piece that I think more people should do.
You sit between capital and operators. What separates the best operators from the rest before they maybe even buy or run the business?
I think there's some basic stuff that like, understanding and being able to run a P&L, right? That's definitely critical. I'd say like the management side and like having a strong management experience is like wildly critical. Even if you're not going to be acting in a managing capacity, but you need to know what a really good manager is because you're going to have to go find one. And the people side, I think, is where people really struggle with these. They struggle to retain, they struggle to scale, they struggle with service and quality as a result. So I think people that have really strong intuitions on like how to incentivize and manage employees are naturally better off. And then I think there's a huge, grit factor with a lot of this. So we get to figure this out a little bit during their search process, their, deal review. Like, how are they able to navigate all these challenges? The reality is like, it's similar to me, like working at a startup. We are constantly running into issues and we're constantly changing and shifting. Like they will have to do very similar activities and potentially for the first time. And they're also in a position where like everyone is looking to them and waiting for them to make a mistake. So like there's an element of like, will they do the work that's necessary and be able to lead this, kind of new organization forward? And I do think that there's a massive like grit element, which is why I think veterans are fantastic buyers to work with.
So operators coming to you because they struggle finding capital and maybe even deals. Investors coming to you because they don't have enough great deals and maybe enough operators to invest in. What are you struggling with, like when running the business day to day?
I think it's right now it's a little bit operationally complex, where as you test out different ways that we'll support, it's a lot of like manual processes, right? Before you realize, okay, this is the right way to go about it. And then you create systems around it. So even, for example, the LP closings process, once we have strong conviction of this is how it should be done and we can create systems and software around it, administratively and operationally, it's quite challenging. And there's a lot of different facets that we run into those workflows through. So that's probably like kind of like the biggest thing. And then the second side of it is like, how do you scale on the capital side across all the different deals? Like right now we have 15 different deals that are raising capital. They're in probably call it 8 different industries. They're ranging from a couple $1,000,000 to $20 million of total like enterprise value, and they're running different strategies. Some are doing cash flow plays, some are doing value appreciation plays. You can slice and dice that up to a lot of different types of investors. So I'm always kind of thinking about different creative ways in order to capitalize these transactions efficiently and under tighter windows, because that does inevitably hurt deals. You know, a lot of times people can't get the final commitment letter from the bank until they have the cap table, right? So there's elements that we can speed up in order to make sure that these deals aren't falling apart as a result of the work that I'm doing. So,
what are some of the things about the deals you've done which you didn't even have idea before joining Mainshares? Is there anything? Because you've seen so much now.
Some things I didn't know, like
something which is like, oh, this is like some structures or could be people, could be expectations.
Yeah, I mean, like candidly, I had to learn pretty much everything. I mean, from the very beginning, I was because I was much more on the venture side. So like I remember early days, I was taking modeling courses at 4 a.m. Early on of figuring out, you know, how to get really good at Excel, how to structure out these different scenarios and deals. Talking with as many people. The reality is like, you know, you have 800 conversations in the first year, you start meeting some really interesting folks that know significantly more than you. So I think a lot of it was new. I'd say like the thing that I think about quite a bit is just like yesterday when we were just evaluating a deal, you realize how deep you can go on each of these transactions to really understand what the true risks are, what the true opportunities are, right? So there's an element of like, you have to make sure you're checking a lot of different things. And this is something I work on quite a bit, is like creating various different like scorecard and processes in order to evaluate deals. So there's some level of like standardization to it. And we're able to then look back and continuously refine this like approach, because we're basically, you know, using feedback from investors, thousands of different investors, in order to refine what deals we focus on, source on. So they gave us the feedback loop that inevitably helps us to refine the type of opportunities that we're going to ultimately support. So there's always different learnings. It's deciding what of those are things that you should take with a grain of salt versus this is agnostic across the board, because everyone is quite opinionated.
Please be brutally honest. What is the things you're enjoying most about the job you do, and what is the least?
So I would say like the most interesting thing is the solve, right? So like, how can we, and I'm mostly focused on like the capital side, right? So like, how can we really efficiently create a process in order to enable these transactions? This even comes down to like pushing, you know, form investment docs. If we can relay those investment docs and investors can get comfortable with it, that can save 2 weeks of back and forth red lines and diligence, or red lines with with attorneys, right? So like, there's different like hacky ways that we can enable these transactions to happen more efficiently, and like continuously iterating on that is very interesting to me. I would say the thing I dislike, I mean, there's a decent amount of like ambiguity of like, what should we do in each of these scenarios, and everything is edge case on edge case. It's not like I dislike it, but it is, you know, occasionally you just have to based off the information, you know, you have to make a decision. You have to kind of live with that, right? So it's like, you know, if it's a strategy, a direction of like where we're going to allocate resources, you know, there's always kind of these decisions in place, and there's really not true answers on a lot of this stuff. Like what we're trying to do is a little bit like creating the status quo. Like, what is the process to raise on a platform? What's the process to run IR? What are the terms? What are the governance terms? So we're constantly, you know, kind of continuously having to, you know, make decisions around that. But there's not a lot I don't like, besides maybe some of the fires I'm putting out on a daily basis.
Do you see yourself one day buying a business?
like
a very traditional cash flow business after all those learnings?
Yeah, we'll see. I think so, though. I'll be involved in this landscape, as a advisor, a capital partner, or hopefully an operator one day. But today we're building Mainshares.
Let's finish it properly. Thanks a lot for doing this, Jude, and I hope to do it again. Hopefully, maybe in 1 year when you've closed all the 75 deals you'd like to do, and we can see what the year 2026 look like. So thanks again for doing this.
Thank you for having me on. This was fantastic. So.